Hello and welcome to this April 6, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by stochastics.com, simply the web's best financial charts. Today we are featuring Interactive Corp, ticker symbol IACI. This is a $2.6 billion services company. Sticking to our recent theme of trying to look at companies on pullbacks, you can see IACI made a big move up in March. It actually had bottomed back on the 50-day moving average at the end of January, early February, ran from about $20 up over $24 in about a 6-week period. And you can see on this second high right here, as it put in a new high, the MACD had actually rolled over and put in a long-term negative divergence. Many times off of this, what we look for is a 50-day test, and you can see a couple of weeks later, that's exactly what we've gotten. And actually on Monday, IACI put in its tail down at 2238, the 50-day moving average at 2235, and then it did recover, putting in a hammer. So we got a nice, or doji, depending on how you look at it, doji on the 50-day. So we got a nice reversing candle at the 50-day moving average after the negative divergence. And if you take a look at the MACD, which had turned negative, you can see that we're actually approaching center line support right now. So that's another good thing here for IACI. Also, back when it had topped out, you can take a look and see RSI was up near 80. Stochastics were up in the 90s. This is what we're trying to avoid in this market. We're trying to look away from companies that are very overbought, waiting for them to pull back and actually get closer to a support level to minimize the risk that you have to take relative to the reward that you're looking for. Now we've got the RSI at 42, and we've got stochastics down at 10 and change. Obviously, that's a much better scenario going long than trying to go long when the stock has an RSI near 80 and stochastics in the 90s. So IACI, I think, looks pretty good from a risk-reward standpoint. The key price support level, you can see right in here, we had broken out above the 2170 area, something like that, 2170, 2180. We broke out above it, moved up, put in that negative divergence, and now have come back down testing the 50-day. So from the current price down to about 2170, 2180 would tend to make sense to accumulate, and then maybe use that 2160, 2170 area as a closing line in the sand. We didn't annotate it here, but if you actually take a line and mark it, connect these lows, you'll see that we come in probably somewhere at about the 2180 area right now. So IACI has a number of reasons to hold support from the current price down to about 2170, 2180. So that's what we look for. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.